So the biggest question I get probably asked is, how do I earn more money and pay less tax? We know this, that simply that they are intrinsically linked, because the more money we want to earn into our own bank, we are going to pay tax to take that out of the business.
Yeah, absolutely.
So what do you think the biggest question you get asked?
How can I grow my business?
Okay.
Yeah. It's how can I do better of what I'm already doing, or are there things I don't understand that can help me get to where I want to go?
Okay. So if we look at business growth then, what's the first piece of advice that you give clients when they tell you they want to grow their business?
Yeah, so the first thing that I speak to them about is actually, what direction do you want to go in? What destination do you want to achieve? And then once we've got that goal established, it's a case of working backwards.
Okay.
And stripping it back and working from the beginning and making micro practical steps.
Right, so we're starting at the end essentially.
Absolutely.
And working our way backwards. Yeah. Okay.
Ship can't go anywhere if the rudder isn't set in the right direction.
Right, okay. We talk about the one degree all the time, where a plane sets off from London Heathrow for New York. If it's 1 degree out, it's going to land in Washington. Yeah. That's the difference that it can make.
Compounds, yeah.
Okay. So in terms of, we sat down with a client, we've explained that we want that they would like some business growth. We've explained that, where do you want to go? We've done all that.
Yeah, okay.
What's the first thing we need to create for them or make for that business owner when they know they want to grow? And we have a rough idea of where we want to get to. What's the next sort of stage that you would work on?
Very simply, business plan is where we need to go next. And that is a concise, one-stop shop place that the client can go for all of their ideas pulled together in a working document. I call it a living document because, ideas and goals change over time. But having something, a business plan in place at the initial startup of a business, or even as soon as you get to the point where you decide, I want to take this in a different direction, you put this all together, and we do this with clients, and it formulates all of their ideas and all their thoughts in an easy, digestible place, which can then be used tangibly for things like funding loans and growth potentials, where the actual documentation is required. But as a starting point, it just puts all of the client's thoughts in one place, and then that becomes the starting roadmap.
So we've got our business plan in place. We've obviously worked hard. I'm guessing we are working on that with them if we want to.
Yes, absolutely.
What's the next stage after we've developed that business plan with them?
Yeah, and it's stick to the plan. Yeah, follow it and execute it. Okay,
so obviously following the plan is a really important one. So how can we help them follow that plan?
Yeah, so we would hold the client accountable. As a business owner, it's lonely at the top, and having someone to talk to about where you want to go and how things are going can be really helpful in getting their thoughts clear and their direction. So the way we would do that here is to hold monthly and quarterly meetings, and like I say, hold them accountable to what we've agreed in previous meetings, and making sure the trajectory of the direction of where they're going is incrementally going in the right place.
And if you have no plan in place, you don't know where you're going.
Strings coming from all angles.
You summed it up absolutely perfectly. If you haven't got a map, how do you know where you're going?
Absolutely. Buyers are appearing, and you're going to put them out as and when they appear.
Absolutely. Yeah. And, trying to get your family to understand that is very difficult. And I know I had a meeting with a client the other day who kind of was having the same arguments with their partner, that they were having to go in and work on a Saturday because a member of the staff was off and that sort of thing. And it is really difficult trying to explain to your family why you're having to go out to work and you're working extra and that sort of thing. Where does your advice come in? Because most of the time, I know when we see people, we're seeing them in distress times, which is, I can't do this anymore.
Yes.
I cannot continue to live this life. I'm working harder than when I was employed. I'm earning less money than I was employed. And I'm not seeing my family. So that's when we tend to pick them up. So, where do you start with your advice at that point? It's very obvious to see they're in distress when they sit down. They've got bags bigger than... Marks and Spencer's bags under their eyes.
I think
if the supermarket's available.
If we just rewind time a little bit there, that what I like to do when someone comes in that sort of position is dial it back with them and understand why they started out and why they are where they are now. But before the distress and before things went wrong, actually ask the question, what drew you to do this in the first place? And working with them and rediscovering the interests or the passion. Because a lot of people mistake an entrepreneur with a business owner. You know, there's a thing of being a technician in your field and thinking, yes, I'm good at this job. I can now go and set up by myself and do the job and earn money and be my own boss. However, once you're in that position, you quickly realize you've got to wear lots and lots of different hats, and you're no longer just the technician. So myself as an accountant, I could set up an accountancy firm like yourself, but then I'd have to quickly learn everything else that comes with it. Managing people, managing clients, managing cash flow. And sooner rather than later, you're dragged away from the actual heart of your work and your profession. And I think a lot of business owners don't realise that. And things go on for years and they get to a point where they need the help and support.
I think you're exactly right. It's people assume because they start a business, or rather because they're good at a skill, they'll be good at running a business. I think we there's a very, very famous book, The E-Myth, Michael Gerber, which is kind of exactly where we're talking here.
Yeah.
Where actually, because I think he uses a hairdresser as the example, because I can cut someone's hair, I can run a business. And it's just not like that. And I think a lot of people get embarrassed asking for help because they think, because I've got a business, I should know how to do everything.
Yeah.
I should know how to balance the books. I should know how to do marketing.
Yeah.
I should know how to do the operation side and make sure all the equipment's correct and make sure everything's working.
Yeah.
And actually, the fact is, what you were good at was cutting hair.
Yeah.
And there is a learning curve. Do you believe anyone can be a business owner? Do you think it's a skill anyone can learn? Or do you think actually you have to have a fundamental element of natural ability?
I think it's a very good question, and I don't have a definite answer for it, but I would be more inclined to say no, not everyone is cut from the cloth to do it, because it's using a diverse skill set and knowing when to pull out resources and have it in-house. And I think a lot of people, the majority of people, are quite comfortable with their lives if they're in employed circumstance and things are going well. I think stepping into that business owner role can be a fear-based thing for them. And no, in all honesty, I don't think everyone can do that.
I think, talking from my own point of view, irrelevant of how, I'd like to believe we run an incredibly process-driven business.
Yeah.
But even so, there are still times of sleepless nights is the wrong expression, but times of worry, times of concern.
Yeah, of course.
It could just be that a member of the team is moving on, flying the nest, and thinking, well, do you know what? If I don't employ the right person to replace them, the whole dynamics of the business are going to change. And actually, if we catastrophize, that's my business over. I'll be on the streets of London before you know it, like Dick Whittington.
Yes, yeah. And I think actually when you strip it back, business is people. And people buy from people.
Yeah.
And losing key members of your team, suddenly you equate that to your business.
Yeah.
So I suppose an approach is, like you say, you've mentioned it briefly, processes and what's the word? Processes and operations in place.
Yeah. Systematization.
Bringing the business to a place where it effectively can run by itself with things in place, with the right people, with the right skill set behind it.
Absolutely.
But theoretically, some key member moves on, the business itself is still retained.
So obviously, as people set up in business, they realise they've got to wear all these hats that you've spoken about. Obviously, the main area, although there are lots of areas we can help with, the main area people would think of us as helping is on the finances. Mm-hmm. So where do you see the biggest mistake, or what's the biggest problem people who are not used to dealing with the finances make when they first start in business?
Yeah, quite simply put, not knowing their numbers, not following the incomings and the outgoings, and not understanding what the numbers mean. And very quickly, I think the stat is 1/3 of businesses fail within the first 2 to 3 years. And it is because they're either spending out too much, taking out too much, or just not making the money when they think they are.
You know, let's take a car mechanic, for instance, who charges someone £240 for a service and MOT, and they think, do you know what, I've got £240 in the bank, I'm going to go away on holiday.
Yeah.
What actually should they be thinking?
They should be thinking, actually, firstly, depending on how the business is structured, if it's a limited company, then the money isn't theirs. It belongs to a separate entity, the limited company. And if it is a sole trader setup, then fine, it does belong to them. However, a large portion of that needs to be considered and put aside for the taxman. Because they've got, and not only that, they've got overheads for the business to pay out for as well. So every time you're making money, you should be thinking, right, well, what portion of this needs to go out and go to these various places?
I mean, that £240 immediately straight to the VAT now.
Yeah, absolutely.
So, and actually, I think that is a really important one that I see all the time is people who have limited companies treating the limited company like their personal bank account.
Yeah.
And actually, you know, one of the biggest pieces of advice I tell people is choose how much you want to earn, and take that on your monthly basis. Take it on your monthly basis through salary dividends, however we best do it for tax efficiency.
Absolutely.
And that's by doing, you need to do your personal budget so that you know how much money you need to live on.
Yeah.
And then when we get towards the end of the year, 3 months before year end, we're going to sit with them.
Yeah, we sit with them. We pull up all the numbers. We talk them through where they are in the financial year up to that point and how things are going to look in the next 3 months for when we come to the year end and the accounts get done and the tax return. So we have a conversation with the client then and talk about extraction and tax bill estimates and what the best way forward is now to help them, like you've just said, if they've got a plan in place, help them get to where they want to get.
And obviously tax savings at that point.
Absolutely.
Or extra dividends or however people want to
best fits in with their plan.
Move on from there. So in terms of, we kind of just touched on that then, so different structures for businesses. If we're looking at business growth, at what point do we need to start looking at business structures and that sort of thing? When do you first have that conversation? From
day one. Yep, straight away we need to establish why we're running the business. What is the ultimate goal here? What's your customer base? You know, we strip it into all these different parts, but effectively, depending on the size of the business and the potential for growth, we track it every year to see when an optimum time is, because like you've said, there's different ways for owners to extract money, and it gets to a point where being a sole trade, where you're subject to the income tax with HMRC, that's the 20% basic rate tax band, and then the 40% higher rate tax band. That gets to a point where actually under that scheme, it's not beneficial, and going down the director salary dividends route. And we work with our clients. If they want to just stay at the 20%, we keep them there. But the added bonus of having a limited company is the dividends have their own tax rate, and that typically has stayed below 10% over the last, few decades.
So we can actually effectively get them more money at a better rate.
Yes,
And I mean, there are obviously other benefits with limited company. So, your liabilities are less extreme should anything go wrong, and things like that. So let's just say we've gone down the growth route and we're growing and we're growing and we're growing. And suddenly we're going to go into, suddenly got 2 businesses, 3 businesses. Let's talk a bit on holdings here.
Yes.
And the benefits of why we would go to a holding co and that sort of thing.
Yep. So when you've got that kind of structure, 1, 2, 3 companies, all limited, you've suddenly got a lot of transactions going between the groups, and getting money from company 1 to company 3 can be quite convoluted and could cause tax issues if not done correctly. So by placing a holding company, which we call a parent company in the land of accounting, sits above these 3 companies, And it just becomes a vehicle for tax exempt money to be moved easily between the three companies for distribution where needed. And it creates a structure, and having a group structure in place is really powerful, because you can have company one do something completely separate to company two. And they are two standalone entities, which are protected by a ring-fenced holding company. Because if you didn't have that in place and you had 1, 2, 3, you, Michael, would be the owner of said companies, and something happens over here, this could impact over here and ultimately impact you. Whereas having a holding company, like you say,
protect your assets in different places.
It's a separate legal entity.
It's also great if there's more than you as a shareholder potentially, because your other shareholder's going to want dividends out of that particular business, potentially for your own personal tax planning. That's not great. So those dividends can get pushed up into the parent co, the holding co.
Yes.
And you can choose at what time you want to be taking them.
And what works best for you. Yeah.
Obviously, we need to say at this point, every situation's different, and people need to seek advice, because there are rules and regulations, as always, on these sorts of things.
Yeah.
So we obviously are going to work on the finances with people and forecasting and that sort of thing. What beneficial things do you talk to clients on a daily basis about that we can help them with?
It can be, honestly, Michael, anything under the sun. We'll look at their numbers, and the numbers tell a story themselves. So when I'm in a meeting with a client, I will always pull up the numbers first, because as a qualified accountant, that's my background. And to me, they're not just numbers on a page. I'm going through them line by line sometimes, get into the minuscule of why something is how it appears. And that in itself opens up opportunities for the client to tell me things I didn't know, by using the numbers as a springboard. So things that have come out in the wash, extraction of money, the bank is down, for example, they're taking too much out. Why are you taking too much out? I need it to live off. Okay. We need to look at if that is sustainable, and can the business keep that going for you, or do we need to look at alternative extraction methods? Funding, when you need money for new assets, let's say capitalisation, we might need to look at when the best time in the year is for that, for corporation tax relief, but also we can provide documentation for the required parties where needed. Other things which clients might not know we can help with, difference between funding for assets such as cars. We've got hire purchase, we've got leasing. There's different tax implications for all of that.
We've also spoken a lot about the different finance sides, that sort of thing. If you had to say 3 non-negotiables that every business has to have within their finance strategy, what would you say those 3 things are?
Yeah, number 1, a robust bookkeeping system on a cloud-based software, which means internet-based, and you can go on into the books. The accountant can at the same time, and you can work together and resolve any issues. And it also means, as a business owner, you can jump in at any time and look at your numbers.
So this is the likes of Xero's, Free Agents, QuickBooks, Zoho, that sort of thing.
Yeah, if you're still on a big red book, as I know a lot of business owners are, that's just not going to cut it in our day and age now. So that would be step 1.
Yeah.
From there, step 2 would be getting a budget in place.
Yeah, absolutely.
And that's knowing your outgoings and your incomings, and looking forward, because I think there's an understanding, or the accounting industry as a whole in times past has always been looking backwards.
Yes.
And, business owners can tell you they'll go to an accountant's meeting and they'll be talking about figures 12 months ago. And is that useful? You're a business owner, Michael.
No, absolutely not.
No.
I don't know where I've been. Don't look in the rear view. I want to know where I'm going and that sort of thing. And, I think the budget's so important, because the amount of people I see who come in who haven't got a budget in place.
Yeah.
And I just ask them the question, when you go to Sainsbury's on a Saturday, do you just keep filling your trolley, and when the person scans it through, do you just say, all right, stop there, I've spent all my money now? Yeah. You don't. You go with a budget in your head and a list of what you want to spend, your income, your outgoings, that sort of thing. Exactly. So I think that is just so important, that an activity we have in our day-to-day lives we're not using in a business environment.
No. And you've just reminded me, the last one I want to talk about is cash flow.
Yes.
And just off what you've just said about using your personal life to influence your business life, if I said to you, your household bills, do you know when they're paid each month?
We've got a spreadsheet in our house. We know different months if we've got holiday payments or childcare payments, that sort of thing.
Fantastic. So what you're describing is cash flow. You know what's going in, when it's expected to go in, and when it's going to go out. So feeding on from the budget, like I say, step 3 is cash flow. And I think if you're going to run a business and you want it to grow and you want it to work for you, then you need to be, in charge of the lifeblood of your business.
And that cash flow literally directly links into our business plan.
It does.
Because if we don't know what we can spend on marketing, what we can spend on new equipment, gaining new clients, we're completely lost, aren't we?
Having that initial plan directs everything.
Yeah.
And every year I'd recommend to my clients to revisit the plan. And things change, evolve over time. And it's a working document, living document that we tailor and refine as the business grows. So
I completely agree it's a working document. I completely agree, stick to the plan. Because the fact is, if we choose something that's not on that plan, it's a bit like not following your values, your vision, your mission statement. It doesn't work for that business. No. And it's one surefire way for us to go bust.
Absolutely.
So in terms of working with clients, obviously there's this big thing in the accountancy world. You'll see it all the time now between compliance and advisory.
Yes.
So although you'll find there's a million different definitions, Adam Roy, give me your definition of the difference between compliance and advisory.
Yep. So compliance to me is the bread and butter standard work that you'd expect an accountant to do. Go to them with a wad of receipts. Here's my bank statements. Tell me how much tax I've got to pay.
Because compliance is to be compliant.
Yeah.
Which basically means doing the stuff HMRC makes you do.
Yeah.
Anything that we have to do in order to, in the extreme case, keep out of prison is compliance to me.
Yeah. Brilliant. No, it's ticking that box. And it's getting things to meet the deadline that need to be done. And
you'll always find a client who actually sees no value, doesn't value their accountant at all, and just wants to keep out of prison. There will always be people like that. Yeah. In fact, there's a statistic out there that 60% of businesses, limited companies, do not use an accountant in the UK. So actually, our pool that we can work with is only 40% anyway. Yeah. And a lot of those will just say, do you know what? I'm quite happy running my business. Just make sure I'm not going to prison.
Yeah. Which is great for some people, but for other people that actually care about their business to a point where they want it to work for them and change their lives effectively. Advisory is there to get more engaged, to show more understanding with the business that you're running. And advisory to me is
help and support.
Thank you.
Help and support. We've said it in a different way before, which is being someone's co-pilot. You said it earlier on. It is so lonely at the top. You've got your 10 hats on. You're having to make different decisions on a constant basis.
Yeah.
I mean, there's very famous people out there. Barack Obama, Steve Jobs, who will only so Barack Obama only wears a blue suit, white shirt, and a red tie. I think it is. Steve Jobs just wore a black top and blue jeans, because it was one less decision they had to make every morning.
Brilliant.
Because you are being thrown constant decisions. I know I'll come into the office if I've been out on other things, and there will be a queue at my door of people going, answer this, answer this, answer this, answer this. So, it is very difficult to do without a sounding board. I've been very lucky coming into a family business. I've always had my dad that I can go and ask and that sort of thing. Mm-hmm. But, people who have just started their business, it is a very difficult one, especially as well with potential, as we spoke about earlier, if you have got, family who are struggling to understand what's going on. being there as a sounding board is really important. Just on that note, I always find it, and I don't know about you, I always find it very useful if I'm having a meeting with someone to tell them to bring their partner along.
Yeah.
Because actually, if you can get their partner to empathise with it, sympathise with it, understand it, God, life's more simple.
It brings it all together, and it is that help and support. It's taking it that step further and breaking down the barrier effectively, where we're doing the compliance, we're ticking the boxes, and we're running a structured business. That's great. But advisory is taking it further, incorporating it into your life, and growing with it as the business develops. We want to be seen as partners to the business rather than just your accountant.
Yeah, absolutely.